Wednesday, August 28th, 2019, Maneco 64, home of alternative economics and contrarian views. You may be wondering what that is next to Billy. Well, it's his 2 kilo silver bar. And he told me yesterday when he saw silver breaking out that he wanted to look after it a little closer. He doesn't want to let it go. It's almost like a bone to him. So today I'm going to cover the gold-silver ratio, why it's so important in the precious metals bull market, and how it's looking. I want to also look at the yield curve. Yesterday was kind of a watershed, I think, for the yield curve. We saw the 2s, 10s really invert significantly to around 4 basis points, minus 4 basis points. And then I'll look at also the Dow gold ratio and how it's looking. And yeah, before that, of course, I'm going to quickly look at what the markets are doing this morning. It's just before 8 a.m. London. Yesterday, of course, stock markets were doing well early on. Bond markets weren't pointing to a strong stock market. And then at the end, the stock market couldn't hold, and we actually finished down on the day. The Dow finished down just about 120 points. S&P finished down 9 points, and the NASDAQ finished down 26 points. Not huge losses, but not good either, right? So let's have a look at the markets right now. 8 a.m., as I said, we've got spot gold, which got up to, I think, 1545 yesterday, 1543. We're at 1538.20, down about 4. Spot gold. The high's been 1544.90 overnight, and the low's been 1531.70. I noticed yesterday early on when silver was trying to break 18 that they were keeping gold actually fairly unchanged. That's how the cartel works. If they lose control of one price, they try to like manipulate the other price down. A lot of times they win. Silver eventually goes down, and gold accelerates lower, but they didn't manage yesterday, which is a good sign for the precious metals. So silver is continuing to do well here. We're making a new high. We're up 9 cents right now at 18.28. High's been 18.36. I'll look at the charts of silver and also the gold-silver ratio when I'm done through going through the prices here. So we've got the Dow 25,800 up about 28.1%. S&P up 3 points as well, 0.1. 2870. NASDAQ 100 future up 7 points. So stock market is up fractionally, 0.1%. Sterling is down 0.2%, 122.70. Euro is pretty steady, 110.89. The dollar is also unchanged against the yen, 105.80. And also slightly lower against the yuan, 716.36. Crude oil did well yesterday after the close, and it's still up over 1%. WTI at 55.50. Brent is at 59.54, up just under 1%. Quickly look at the 10-year yield right now. It's down slightly. It's at 148.30. The 2 years at 152.40. So as I said, minus 4 basis points inverted. And with that, let's go look at the gold-silver ratio. I've got a monthly chart, so you have an idea how important this ratio is to precious metals, a bull market. You can see in the beginning of 2003, just before gold started really ramping up towards the 2008 high, we topped around 80, just above 80 in that gold-silver ratio. And in 2008, when gold topped, it was around just above 50. It did get to below 50 but that was in 2006. That's why it's important there that silver is outperforming when the precious metals are going up. You can see how important it is that silver is outperforming gold in the bull market. At that time in 2008, silver topped at 2135. And then we've got the top in July 2016, which was 2106. That's why that area there, 21 to 2150, is so important now. I think that will be a next key technical level for silver. Well, let's get back to that gold-silver ratio chart. You can see after the top in 2008, that ratio again went up to around 80, just below 80 there, and then bottomed in 2009, the precious metals bull market, just before the beginning of 2009, I mean, and then we saw a huge move to 32, and that was when gold went up to 1921 and silver went up to just under $50, and we've been going up ever since. In July of in 2016, as you can see here, it looked like we were starting a bull market. That ratio topped just above 80, around 82, and it was going down, and then it just started moving back up towards the end of 2016. And it looks like now we've got a top here above 90, and that was in July still this year. It's coming down now. You can see there's an important trend line here coming. This is a monthly chart. So right now the support there is just above 80, which happens to be a key level as well historically. So I look to 80 as a key level. If we break through 80, that will be quite a confirmation, I would say. Am I saying that right now? Nothing's confirmed. Not really. I think the probability that we are now in a precious metals bull market is very high. Does it matter to me and to Billy? No, because Billy and I know that historically paper money always reverts to its intrinsic value, which is zero, as Voltaire once said. So that's why the gold-silver ratio is so important, and we need to keep an eye on it. And the gold-silver ratio, of course, is just how many ounces of silver you need to buy 1 ounce of gold. So the lower that goes, that means that the better silver does. If you have gold and silver, should you sell your gold and buy more silver with that? I get asked that question a lot. I personally don't. It's up to you. I keep the same proportion. I might just buy more silver in the future. Or if I can, if I have enough spare fiat balances, I might buy more silver than gold. But no, I wouldn't get rid of my gold to get silver. It's a little costly to do that for me. And I don't think it's worth it. They'll both do well. They'll both do well. So the yield curve. So as you saw earlier, we are now 4 basis points inverted. And it's the first time in 12 years that the 2s, 10s are now inverted. Usually that's a sign of a recession. It doesn't mean that it's 100%, but it's a very high probability. So that's why this 2s, 10s yield spread in Treasury bond market is so important. The 3-month to the 10-year, that inverted late last year, but the 2s, 10s are a better indicator. Some people think that the 3-month to the Fed funds is a really good indicator as well. But that's a little more complicated, so I'll stick to the 2s, 10s. And now let's have a look at the Dow gold ratio as well. I've been speaking about this for the last month or so, maybe even a little longer, because we've been, this head and shoulder formation has been evolving. We're right on that trend line right now. So I think that's just as important as the Dow gold ratio. And I think we're going to break below that neckline. So what does the Dow gold ratio mean? Well, just how many ounces of gold you need to buy one Dow, right? And the lower that goes, it just means that gold is outperforming the stock market. I've said in the past that we need to say a Dow gold ratio of about 1, looking back historically, if we want to see some kind of rebalancing, or if you want to call it a reset of the system between tangible real assets and paper assets. But as many of you know, we are in unprecedented times. We've got nominal interest rates that are actually negative. We've got central bankers who are printing money like there's no tomorrow. So unprecedented times. I think it's the end of the post-war World War II system, dollar system, personally. And things are going to be very volatile. Precious metals, I think, are going to continue to do well. It's one of the only monetary assets that have a track record of thousands of years, unlike paper money. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.